Insurers aren't necessarily crap at marketing, but they haven't had to be good at it.
Hello and welcome to the InsTech London podcast. This is Matthew Grant, partner at InsTech London, and for this episode we are bringing you part one of our Marketing of Innovation in Insurance event that we held on the 30th of April. Marketing in insurance is tough, so we set about to show some of the innovation that is happening around marketing itself, and we had a great evening. Weren't disappointed by some of the things we learned. First up is Robin Mertens talking to Paul Doran, VP of Marketing from Inshur, who provide insurance for professional drivers, including those working for Uber. Next we have Paul Glenn, Commercial Director from Gobsmack, talking about some of the cash rewards they're providing as part of the insurance purchase. Carlos Wong-Fupai from AM Best and Dan White from 90 Consulting talk about AM Best's new rating methodology, which has generated a lot of interest across the innovation world and insurance. 90 themselves have got their own innovation maturity audit, and so Robin is talking to both AM Best and 90 about both of those. And then finally, Milan Sood, Head of Innovation for AXA, is back talking about how they are working with partners to promote AXA both directly and through their third parties. We'll return next week with part two. In the meantime, you can learn more about what we're doing at InsTech London from www.instek.london, along with commentary, photos, and news of future events.
Paul Doran, who's the VP of marketing at Inshur. What we sought to address when we were running this event was who of the Inshur techs has picked up a reputation for doing marketing really well. And we're going to examine two things. We're going to examine B2C marketing, those people who are going direct to consumer and marketing well, and later on we're going to discuss B2B marketing and those people who are addressing a different issue, which is how to get to brokers. And so, Paul, firstly, for those who don't know, what does Inshur do?
Thank you for the introduction, and I guess a quick overview of what the product does. We provide a commercial insurance product for, the easiest way to describe is Uber drivers. So a commercial insurance product for Uber drivers where they can quote, buy, and then manage a policy all via their mobile phone in about 3 minutes. Which is classically a process for your average Uber driver that might take 3 hours, it might take 3 days. So we've whittled the experience and the process down to a time that's much more acceptable for a driver who lives and dies by time and is incredibly focused on earning money as fast as possible.
I think based on some of the Uber drivers I've been with, if you can get them to buy insurance, that's a pretty powerful tool. But look, how do you market to these people? I mean, they're not, people who would naturally you market to.
Yeah, they're a really fascinating audience, and I think when I took this job 2.5 years ago, I kind of fell into it more than took it. But taxi insurance is not necessarily that sexy, and it's compounded by the fact that you're dealing with a hugely diverse audience, customer base. If you think about New York, there's a huge Hispanic community. In the UK, there's big Bangladeshi. So you have this massive diversity, and that really is a challenge. And I think one of the things we've done and worked very hard to do is show empathy. Drivers often are on the first rung of the ladder in a city. Driving for Uber is a way to quite quickly earn some money, and they work hand to mouth. They will earn the money that day and put money on the food on the table, or send money home by TransferWise. And I think understanding that and showing some empathy has taken us a long way. I think insurers the world over have realised they need to treat customers better. You take a look inside the dark world of kind of taxi insurance. Customers are treated really, really poorly, and so anything that we do is incredibly well received. So affinity. I think being active in their communities is something that we've worked hard to do. We launched a product really, really fast, and rather than trying to market a bad product, we iterated. We used the first probably, I think it was about 8 months of this MVP, a minimum viable product, as testing, and we proved a business case very, very quick, but we saw its failings. And rather than kind of ploughing on, trying to tell everyone it's the best product in the world, we reinvented the product. We had some real issues with we'd effectively built a mobile front-end business with a fax machine at the back end, a panel of carriers, a mobile front-end, panel of carriers, and we were trying to manage that process, and it was failing. It was incredibly difficult. And so we iterated. We moved really fast. We sought the help of partners. We ended up very happily in a relationship with MRDP, with Munich Re, who understood very quickly what we were trying to do and the idea of a kind of a straight-through process of being able to deliver a real-time price very, very quickly.
What data sources does one rely on, you know?
Yeah, I mean, our business is one big data cube, and I think it's what we hope sets us apart. We are learning how best to get data out of the business, out of everything we do. Every time we connect a driver, we're pulling in data. We're looking at trips, we're looking at location, we're looking at telematics. We ask, relatively few questions for an application process. Maybe you have 25 in a classic insurance quote process. We ask about, I think, maybe 5, but in the background we are pulling in data all the time from publicly available sources in New York or through partnerships that we have with other companies. So data absolutely is the beating heart of what we do. I think beyond that it's working out how to monetize it, and I think make it valuable to customers, not just taking data from them for the sake of it. It's finding ways to actually give them some benefit back. So if they're a good driver, they get a better return. If they're open and honest with us, they get a better return. And I think we act as fairly and amicably as we can. And I think again that sets us apart.
If I recall right, you've got a referral scheme, is that right? Do you use that to get to more people?
Yeah, drivers are incredibly well connected. If you are a Dominican driver, Dominican drivers make up probably 70% of the market in New York. If you're a Dominican driver, you have a brother, a cousin, a relative who also drives. And we identified this ripple that would often happen once we kind of infiltrated some of the communities, that drivers would tell one another. They're mini entrepreneurs. They're fabulous characters. They are really entrepreneurial, and everyone's got a hustle. Everyone's got a network. Everyone can help you. But we formalized a program with some of our most influential drivers, our most engaged drivers, small community, about 800. And at the time we were unfunded. So it was what I call a Blue Peter approach, where you literally stick software together to make an automated process. And we incentivize drivers to invite their network to come and try the app. That was very important, that we weren't incentivizing a quote or a purchase, but just to download and try the app, not to fall foul of any regulators. And it really has taken off. We are now funded and are now looking at an automated platform to help us make that process work much more seamlessly. So from giving a driver a dashboard to see that he's got, and sadly it is he, the 96% are male, how many links he's invited and how many drivers have engaged in with his link, how much revenue he's making, and we get a management dashboard to see all the drivers that are inviting others to our product. And that is a huge focus for us, because that's advocacy from within. It's not paying Google, it's not paying for our party in Facebook, it's real advocacy from customers that have experienced the product and said, actually, this has worked for me, I'll share it with you.
Paul, thank you very much indeed.
Thank you.
So everyone, this is Paul Glenn. Paul Glenn is the founding partner of a very interesting business called Gobsmack. Now, for reasons you're about to find out about, a lot of you won't have heard about it, but in terms of insurance marketing, I think it's a fascinating play. Before I steal your thunder, what does Gobsmack do?
Gobsmack has created a B2B to C digital platform, which is simply aimed at improving consumer and, to an extent, SME retention in businesses that have a recurring expenditure. So initially, you start off with insurance. At the centre of the business is a client-branded digital wallet into which cash accumulates. We'll come on to, I guess, how that happens, but that's the centre of the business.
So, whose idea was it, and how did it sort of? Tell me about the story, because it's a nice story.
I mean, I've had 30 years in the insurance industry. I came into this by meeting the main founder of the business, a guy called John Shaw. He's a branding expert, been in branding businesses all his life. He was in the banking sector. He then moved into the insurance sector via a connection with a guy called Max Carruthers, who's our chairman. Max has had a lifelong career in insurance. He was CEO of AXA at the time. He'd left, actually, he'd retired and gone back to AXA as a consultant. He rang John up. He'd come across John in a past life and said, I've got a rewards program at AXA which isn't working too well. Can you come along and help? So John went in to see what the problem was, said, yes, I agree, it's rubbish, it's not working very well. But I'm not going to just give away the answer, there's a business here. And this sort of stemmed from others have said this already. I mean, I think we all appreciate how generally, appallingly badly, insurers treat customers. And it's very easy to identify. If you take the average motor customer, comes into a product sort of day one, first time he's insured with a particular insurer. He's enticed in on a very cheap premium, comes in, possibly bought it through an aggregator, comes up to renewal. Now, insurers generally work on the basis that 30 to 40% of their customers are going to sleepwalk through the renewal process. So they increase the premium, let's say, substantially at renewal. Some people sleepwalk through it, don't notice, just pay. Others do notice, go back to the aggregator, get a cheaper price. The best bit for me is they then say to their current insurer, I've just got a much cheaper deal. What's going on? And they say, oh, don't worry, we'll match it. Now, if that's not an appalling way to treat an insurance customer, I don't know what is. So the whole point of this was to create a new value proposition between insurers and their customers, and to try and create some sort of positive value exchange, which really shouldn't be very difficult because it's so appallingly bad to start with. So that's how it was born.
So where have you got to? Have you got some customers?
Yes, we've been live now with More Than for 15 months. It's fair to say that 2018 was very much, I use the word pilot. We learnt a lot together. Obviously, the centre of the business is a software play. And guess what? We had some tech issues initially. So More Than have been brilliant in terms of learning with us throughout 2018. It's gone out to proper volume with More Than the first quarter of this year. I can't say who it is, but we're just about to launch tomorrow with a very large UK insurer. It's our second major client. We've also got a very large travel business, which is not insurance, as you've probably guessed, which launches early June. We have another insurer, smaller one, launching September, and we have a good pipeline in the UK and potentially overseas as well.
So I'm intrigued. Can you sell this to all insurers, or does it stop being a differentiating tool once they've all got it?
That's a very good question. No, our aim is not to try and saturate the UK market with this for obvious reasons, because the insurers that we are contracted with currently, to an extent, want this to be a differentiator for them. So if we try and sell this to every UK insurer going, then clearly that defeats the object. To an extent, we are not overly worried about how many insurance clients we have. For us, it's all about customer exposure. So all we want to see is that any insurance partner is going to expose it to enough of its customers quickly enough to enable us to get traction. So within reason, we don't care whether we've got 2 insurance clients or 10, but it isn't 10 for the reasons I've said. And so beyond the UK, we'll get into, we've got opportunities overseas, the US being the obvious one, and elsewhere in Europe. So through our connections with More Than already, we're talking about spreading this to some of their affiliates in Europe and Canada.
So if someone is interested, they should come and talk to you. You're not maxed out just yet?
No, we are not maxed out just yet in terms of clients or funds, actually.
Well, that's another question. If you're rushing off to the far corners of the world, where are you with money? Have you got plenty?
We're on our fourth fundraise at the moment. We're currently most of the way through a current raise, which is we're after about 3 million quid. We could do with another 1 million reasonably quickly, but we're fine. But the next 3 to 4 months is crucial because we will have a lot of data on some high volume business to really prove the algorithm.
And what's customer feedback like? I mean, given you're addressing a very big issue, you must by now have some sense of whether it's addressed the underlying issue of improving sort of loyalty and...
Yeah, I mean, insurers, it solves lots of problems for insurers. So as far as clients are concerned, as in insurance clients, it gives them a completely new channel of interaction with their customer base. It gives them new marketing rights under GDPR. So as a result of signing up to the rewards program, they are signing a separate set of T's and C's, which means the insurer can communicate to them about offers that the program gives, which can include discounted offers on the insurer's own products. So whereas before they may not have had marketing rights, they now have marketing rights. They can talk to their customers about additional products as part of the program. So it solves a number of issues for the insurer. It improves retention. That's the main thing, which, as many of you will know, is extremely valuable to an insurer to get his retention rates up. As far as the customers themselves are concerned, the consumers, I mean, we're seeing phenomenal interest. I mean, there's various stages of registration onto the program. And these include the ability to register a credit or debit card. You can register up to 15. They don't have to do that, but we encourage them to do that. There's a browser plugin. We're getting something like 35% of people registering with the program downloading the plugin, which makes online shopping very easy, and it means the cash can accumulate into the digital wallet in a virtually frictionless manner. We ask people to tell us what their interests are, so shopping categories. We've got something like 40% of people who are registering, interacting with the proposition to tell us that, which is fantastic. The average card registration rate per consumer is about 1.7 cards per consumer, which has blown us away. We never thought we'd get that high. So the reaction so far has been very positive.
Paul, thank you. So if you've got a spare $1 million, come and talk to Paul. And if you work for an insurance company that needs a loyalty scheme, he's also your man. Paul Doran, thank you very much indeed. The announcement that has most captured the kind of imagination and a talking point for us innovators in the last few weeks has been AM Best's announcement that they're going to add the ability to innovate as a rating criteria. So we thought the first thing we would do is get Carlos along here, who is your role is the Senior Director of AM Best. Now, I know from long experience that the insurance industry is not quite necessarily ready to engage. What are you expecting as a result of this? Mm-hmm. What are you expecting? Studied silence, or are you expecting people to rush to your door and ask you what they need to do?
Well, until now, we have actually had a very positive response on this. Say, this hasn't been just something that came out of the blue in March this year. In the last 2 years, there has been quite a lot of interaction with the industry. We carried a survey in September 2018 with a very high level of participation, around 90% of respondents. And the outcome of this was that definitely it is something that companies consider very important, very relevant. From a ratings agency point of view, it is an element that we can see as long-term a good indicator and differentiator of financial strength, which is eventually what we are after. So there are questions, definitely. Yeah, say rating contacts, one of the main questions they are asking is what else do we need to do? Say how much work, in addition to the work that they already do when they interact with us, are required. And the other point is obviously, say, what sort of impact they expect to have in the ratings. In answer to that, what we are saying is it's going to be a gradual process. It's something that we think that we have already been doing, but we want to give it a bit more structure. And at this stage, we are not expecting any material impact on rating outcomes. It is something that, say, with time, is going to start having more and more weight into the rating process as a whole. Yeah.
Well, on behalf of all innovators, thank you very much, because it has got people talking and it has created some external driver which might well be a powerful force for good. Don't move, because I'm going to ask Dan. Up to the far left, Dan White, who's the managing partner of 90, a gold sponsor of ours and good friend to InsTech London. Dan has been innovating in insurance around product and has a very well thought of insurance product design agency. So, look, you're steeped in this stuff. What do you think insurers are going to do as a result of the AM Best announcement?
I think the announcement from AM Best is something that we welcome very wholeheartedly. We think that as a formal recognition of the link between innovation maturity and innovation effectiveness on one hand and financial performance on another, we think it's a really strong validation of the work that we do. I've brought with me a handful of copies, pre-release copies of a report, a white paper that one of my colleagues has written, which is looking at the direct relationship between innovation and insurance and company value. And there's a lot of evidence behind that link. A bunch of positives, Robin, in what we see in the AM Best announcement. We're going to be responding to the consultation. Thank you for the opportunity to do so. Some of the positives, really, the fact that you're looking at the long-term outcomes of innovation rather than just the activity. Secondly, the emphasis on people and the people involved in the process. They make innovation happen. It's a lot to do with character and personality. And third, the level of transformation kind of indication that you're going to provide there, that's going to provide a sector-wide view of how disruptive are things. So those are all positives and to be welcomed.
But if you're an insurer and you're advising insurers, what are you going to tell insurers to address in the knowledge that AM Best are going to come calling at some point and they need to be seen to be more effective at this stuff?
I think we wouldn't particularly change our tune, which was that doing innovation well is good for your business. And regardless of whether AM Best are going to be crawling over things to put a score on it, you should be doing it because it's the right thing to do. Day-to-day practice, the execution of disciplined innovation is what matters. And it's actually very, very nuanced as a thing. So there are a number of questions that we've got around the methodology which we'll be submitting in our response to the consultation. Some of these are around things like the importance that we see in incremental innovation, Horizon 1, the kind of small-scale stuff, which we believe if you do a lot of that well, actually that gives you more competitive advantage than doing one or two big things which can be more easily copied. So that I'd like to see a little bit more in the methodology. A greater emphasis on customer-led innovation, having customers in the room, doing innovation as close as possible to the customer rather than in the center of the business. One of the things I'm conscious of is the difference in innovation intensity between different categories of innovation. We're running an interesting study at the moment called the Idea Pulse, where we're taking the temperature of innovation across the whole innovation market globally, and we're seeing a really strong difference between categories like personal lines car and life insurance. Big differences in how intense and how mature innovation is taking place. So I think there's something to be thought through in that. And also have a mild concern that the score could be gamed.
You've been providing this health check for some time. I mean, is that a tool that you think the industry could use to kind of assess its readiness for an AM Best, credit review type approach?
It could be. I think what matters is to take a real look under the hood of the insurance business in every kind of area and work out where are we good at innovating, where are we poor at innovating, what are the things that are holding us back and dealing with those, and doing more of the things that are good behavior. So with the clients that we've worked with, we've been rolling out a health check tool that we call the maturity audit, which is looking specifically for many of the things that you're going to be looking for, actually. And I thought I'd share a few of the findings that we've seen when we've run that on some of the insurers, probably some of the ones in this business, in this room, actually. So just a few interesting findings which might be useful on this. First is insurers tend to rate themselves very strong on strategy, but quite poor on execution. So they've got a good innovation vision, very poor at the disciplined delivery. This is self-rated, okay? Second thing we see in this is that management tend to score themselves better at innovation than the staff do. There's quite a strong difference there. And that's one of my worries about the scores that you might get. And then a couple of kind of specifics here. A third of the insurers or people within insurers who we've surveyed here didn't know whether their own chief exec monitored or had an active interest in innovation. That's a third of people not knowing whether their CEO cared about innovation. We think that's shocking. Possibly more shocking, when we looked at the gender split in innovation practice, women within insurers are reporting in our health checks about 20% less sense of empowerment, of engagement or envisionment in the innovation process. So 20% less likely to submit ideas than a man. We think that's shocking, all right? But what's cool about this kind of detail is that it allows you to do something about it. You can target interventions against this stuff. So to answer, sorry, your slightly long-winded way, your question, then yes, the kind of health check that we run in principle might be an interesting kind of start point.
Well, I think it'll turn up things that are far more exciting than simply, are you any good at innovating? If people are interested in running a sort of preview, if they want to know more about it, what do they do?
Our website, 90.com, get in touch. It'd be good to talk to you.
Carlos, have you any thoughts on that? Anything you want to follow up with?
No, I think that, we've been discussing with several parties, and we're open to new ideas, so it will be definitely interesting to hear from you. Part of the ultimate objective of the project is to have these scores actually published, so we are very well aware that companies will try to start benchmarking against each other, and any point of reference will be helpful. Definitely. Thank you.
Both, thank you very much. That was terrific. Thank you for your contribution. This is Milan Sud, who is the head of innovation at AXA Partners. We all know AXA, but what part does Partners play in that huge group?
Yeah, so it's sometimes slightly confusing for me, so I can imagine externally it's even more so. But AXA Partners predominantly make it easy for other organisations to do insurance. So we allow other organisations to take our products and distribute them to their customer base. Traditionally, we've been in the insurance sector, so allowing other insurers to sell our products, but increasingly as an organisation, we've kind of gone through what startups go through a certain extent, which is we'll try and do everything B2C, and that's great to a certain extent. And when you work for an organisation like AXA and have the history and the scale and the brand and the marketing budget, that's good. But actually, we've recognised there's huge rewards in more of an ecosystem play. So we are now basically allowing our insurance products to be distributed by a whole range of organisations, from retail, telco, travel companies, utilities, you name it. We're going after them in terms of allowing them to distribute insurance.
So is that what I call B2B2C, with you doing the B and somebody else doing the B2C?
Yeah, precisely that. We recognise that organisations outside of sector have fantastic relationships with their customers. Their customers quite often have more affiliation to their brand. And we thought, why the hell are we trying and going out and build all of that when they have these good relationships already that we can leverage, allow them to drive ancillary revenues alongside their core products, and basically leverage the goodwill that their customers often have with them.
So make someone else do your marketing for you?
To a certain extent, yeah.
Very clever.
I think it's about recognising what you're very good at, especially when you're in an industry that's being disrupted. You should really focus on fundamentally what you're very good at and try and build out from there. So we are very good at doing insurance, and we recognise there are a whole range of organisations who are, to a certain extent, better than us at doing marketing. So why would we not work with those organisations to distribute our product?
Very smart. Now, and what sort of organisations are you after? I mean, who do you go after? Does it have to have huge scale, or is it particular things here?
So we go after a whole range of organisations. You know, one of the fortunate things for working like an organisation like ours is that we don't have to necessarily just go straight after the big ticket items that have the immediate scale there and then, although they're fantastic if they fall into our lap, clearly. Just recently we've done some deals with organisations like EE, the UK's largest telco, with Scottish Power, one of the big 6 energy providers, and those deals are fantastic. But we're also looking at those organisations who give us longevity in terms of distribution. So we recognise that there are many organisations who have a lot of potential scale, and we're willing to take bets on those organisations, partner with them, and hopefully build a relationship that allows us to distribute long into the future.
I don't know why I'm asking this, but it's because it's a dangerous question. But why are insurers so crap at marketing?
I think insurers aren't necessarily crap at marketing, but they haven't had to be good at it to a certain extent. And the reason for that is we all know that certainly in personal lines insurance, aggregators play a huge part in the way that we distribute our products and services. We know that customer behaviour generally dictates that they will come to renewal. Somebody touched on it earlier. They will look for a cheaper price. They will then go back to their insurer who will try and match it. And it's not a fantastic customer experience, but it's one of those things where you either take a very big gamble and choose not to play in that space, an organisation like Direct Line or someone like that who are very clear about not being in that space, or you play the game. And actually insurers have for a long time recognised that they're a necessity purchase, and actually being on these platforms means that they'll probably get enough traffic to continue to drive business. What I'm seeing through working across a whole range of sectors is that there are organisations who are much better at slotting product into people's lives at the right time. And I think that fundamentally customers, people are lazy. They don't like to have to go in and put information into a third-party system elsewhere to get something. Actually, if an organisation can surface the right product at the right time through the right channel and it's a decent price, they're going to buy that product. And I think that's where, from a marketing perspective, we have to get much cleverer about how we use data in order to surface the right product for the right customer at the right time, rather than necessarily just being on these generic platforms, which requires a level of proactivity from a customer.
So that begs one last question, which is the future of marketing for organisations like yours partner, or do you go and nick their ideas and bring them back to insurance?
I think it comes back to a point that I touched on earlier. We're very good at what we do, and we will always improve on what we do. But it's also about recognising that organisations out there, whether small or large, have their own skill set, have their own assets, and are very good at what they do in particular. And we very much take a partnership approach. The clue is in the name. AXA Partners, we are not here to come and cannibalise businesses. I've worked with organisations who have worked with fintech companies before and tried to make them pivot, too many times, ended up killing a business. We're not about that. What we're looking to do is work with large industry players who have a certain skill set through to insurtechs who have a certain skill set, and see how the assets that we have, brand, scale, history, a fantastic ability to deliver insurance, marries up with what they have to ultimately build a product or build a service that really will kind of revolutionise the market.
I've been banging on about ecosystems for some time. It seems to me that lies at the heart of this whole thing. Milan, so thank you very much. Thanks for joining me.
Thank you, everyone. Cheers.
Well, thanks to everybody who joined us for this event and made their way up to Shoreditch, where we were guests of Amnesty International. We'll be back next week with the second half of the evening, when we heard a little bit more about our company's marketing, and in particular our organisations such as Insurers have been successful of marketing in the B2B space, notoriously difficult to break into as an outsider. Also hearing from companies like Marketing Eye and Slipcase what they are doing to promote insurance companies and innovation in the space, and an expert from LinkedIn on how to maximize your presence on LinkedIn. And then finally we hear about the cyber hack promotion that Hiscox ran, where they had more than 20 million downloads of our video. In the meantime, you can learn more about what we're up to on www.instech.london, including our future events, and can also sign up for our newsletter.